Throughout history, man has marveled at the vast complexity of the universe. Without a single unified voice, humanity has been left searching for answers to the unknown. Now, one man has the power to change that and to spread his voice across the earth for all of mankind to hear. One man. Me.
Alright, I'm going to say it again. When I first started making these videos, I wanted to tell people the types of things that I wish somebody would have told me from the beginning. And this is perhaps one of the most important. One of my last videos about Fibonacci retracement, a lot of people were asking how to use it. And there's a ton of videos out there that will teach you how to use it. But I don't see many videos of people telling you why you're using it. And I've seen this in the workplace a lot. People would do things a certain way, be shown how to do something, and then maybe the worker would try to find their own way of doing it, a quicker way or easier way, and it would sometimes screw things up, and they'd have to be told, no, you have to do it this way, this is why we do it this way. And this is the perspective of the basics of Elliot Wave principle. This, I think, is the why perspective. What the Elliot Wave principle says is that mankind's progress, of which the stock market is properly determined valuation, does not occur in a straight line, does not occur randomly, and does not occur cyclically. Rather, progress takes place in 3 steps forward, 2 steps back fashion, a form that nature prefers. As a corollary, the wave principle reveals that periods of setback, in fact, are a requisite for social and perhaps even individual progress. Until a few years ago, the idea that market movements are patterned was highly controversial. But in recent scientific discoveries have established that pattern formation is a fundamental characteristic of complex systems, which include financial markets. Some such systems undergo punctuated growth, that is, periods of growth alternating with phases of non-growth or declining, building factly into similar patterns of increasing size. This is precisely the type of pattern identified in the market movements by R.N. Elliot some 60 years ago. Most important to individual portfolio managers and investment corporations is that the wave principle often indicates in advance the relative magnitude of the next period of market progress or regress. Living in harmony with those trends can make the difference between success and failure in financial affairs. So basically what it's saying is that the market mimics people. People have periods of success and regress, but we all do a pretty good job of learning, and so we have this upward trajectory over time. And Elliot's wave is just a way of kind of gauging or measuring those possible movements using a scale, using a reiteration of a value that never changes. All right, that's all I had to say. Thanks.